Hello, this is Martin from Secret, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show. This is for January 28th, Friday 2022. So it was a 1% down January monthly expiry that happened, and banks are showing strength, and the market seems to have digested the Fed meeting outcome today. We're reacting to that, and then let's see what happened exactly. So, as usual, we'll be doing the pre-market analysis for tomorrow. Jan 28, based on all of these parameters that you on the left side of the charts, we'll also have data analysis based on additional parameters like what you see on the right side, and also we'll have some actionables. So without wasting time, let's get into the price action. What you see here is a green close, right? And it's an inside bar, right? That is fully engulfed with the previous candle bar, right? So it could indicate a consolidation, probably. On the Bank Nifty charts that you see on the right side, you're seeing a bullish wide range candle which is closed above the previous candle, and that shows bullishness. That's a price action. And it's so what happened with the market is, like, Nifty gave up 1% at the end of the day, but managed to close about 17,100. And despite the Fed outcome, it didn't close that bad. Also it's an inside bar. Bank Nifty close points 73% green. So Bank Nifty closed green and Nifty closed down, losing points, right? So it's also closed above the 20 and the 50 DMA. Intraday price action, if you see, the Nifty had a 2.3%. So it's a gap down that happened on the Nifty. Here also you can see it's a gap down that happened, and then it was downtrending more, most of the day, and then the second half, of the expiry, it was trending upside for the both indices. What exactly happened? 2.3% was dip happened in Nifty, 1.8% dip happened in the Bank Nifty. So it dipped, and then it Nifty trended up. With a V-shaped recovery happened 1.8%, and then for Bank Nifty it was much more strength recovery. So 3% recovery happened. Now let's see what the Bollinger Bands were saying. Is it sideways consolidation can be there, but with huge volatility can be seen, right? The distance from the median to the upper and lower bands are big, so volatility will be there, but the sideways move can be there because the bands are started contracting, and it's showing some bands are showing some sideways indication on both the indices. You can see the upper band, lower band, upper band, slowly the contraction has happened. Volatility would reduce, but probably after the budget month. So that's what the Bollinger Bands are talking to us. Now, support and resistance levels right now on the Nifty, right? You can see that 17,200, 17,300 was conquered, and then that seems to be some kind of resistance, as of now. And then above that you have 7350 to 7400, that will be next resistance, and then 7500, 7600, so Fibonacci 23 resistance, and above that 17850. And similarly, the support downside would be 17,000, 17,050 for support, and below that you have 16,800 to 16,900. That's 38. That would be the support major, and then below that 17,600, 16,700 to 16,750. That's the next support if that is breached. Similarly, the Bank Nifty, you have resistance at 38,000 and 38,100, and then above that 38,350 to 38,500. They above have 39,100. Below you have the supports at 37,400. This is Fibonacci 23 retracement level. Then below that we have 36,900 to 37,000 level, and then below that you have 38,330, not 38. It's 36,300 to 36,700, Fibonacci 38 levels. Let's see supports down. If that is breached, then you have 35,600 to 35,900 levels. That is also breached, you come to the 35,000 levels, which is the Fibonacci 50 retracement levels. Making all of these support and resistance levels while you're taking questions. Divergence. Momentum is actually bearish on the Nifty short time frame, and Bank Nifty also the momentum is sideways. So Bank Nifty is sideways better, but Nifty is still bearish. But the good thing is that you have a momentum bullish divergence 3 bar. If that works out, the momentum is rising up and the price is moving down, so that's bullish. So it can move up is what that's a good thing that you can see on the Bank Nifty. right? On the Nifty, Bank Nifty, it's sideways and heading towards the resistance zone, and if it climbs above there, it's going to be bullish. So that's the momentum and the divergence details. Trend, yeah, so it's the DMI negative, right? So it's bearish zones, and the trend is rising on the Nifty. Trend is not rising, even though it's bearish zones on the Bank Nifty. It's on the short term. That's what the trend is indicating. Volatility VIX is flat. It's flat today after a big spike that happened the last several days. Some cool off happened on last day also, but today also some flat cool off of 1% has happened, and it is settled at 21 points, 21 levels. Embedded volatility is 21.2, and then IVP is at high 80.7. Right, so the VIX is between the 20 and 15 and 21 range. It also attempted to move up the 24 levels earlier, and yeah, so since the VIX is at a very high level, so you need to be a little cautious about the volatility when you're taking the transit data or seeing. Operators analysis is showing that. So this, first keep in mind, this is for the next expiry, which is going to get traded from tomorrow, Feb 3rd of 2022, and the Nifty support levels will be 15,100, and after that you have 17,000. That's where the highest put trading is now. 19,000 is the highest resistance, and then after that 18,000 is the next resistance after that. So this may not be taken into full consideration, as the trading is going to have an activity. So operators may not be that much relevant. Put call ratio is bullish 0.77. Short belief is what happened to the futures operators. Bank Nifty 37,500 and is what the highest put rating is there. 37,000 also has a good put rating. 38,000 is what good resistance and call rating is there. 38,500 also has good call rating. So the resistance can be seen at 38 and 30. 1.15 is put call ratio is bullish. Long build up is what happened in the futures operator strategy. So you see a red all over, right? Some banks perform, so financial services only sector that performs. That's what you see in the heat map. Sectoral performance, if you see, the IT closed red, 3.5% down. Metal closed red, 0.7% down. Auto closed green, 0.3%, and pharma closed red again. FMCG 0.87%, FMCG closed 1%. Realty closed green 1.8%. I have just have to confirm on that reality part. I have a doubt. Let me just see. Yeah, so reality it's down actually. Reality is actually down. This is a mistake. It closed red one. So all the sectors closed red except the auto sector, which slightly reason. The momentum is bearish in all sectors except metal and auto. Right, in the short term it is sideways for metal and auto. Others it is bearish. So till the momentum gets, you'll have to wait. Institutional participation, the latest today's data is not available, but definitely big selling might have happened. The FIs again. So FI had sold big 7,000 crores, and then big buying also happened, but not to equal the FI selling. Right, big selling has happened in the FI. Institutional selling, it's a concern. Dollar index, as you can see, it's rising up. Dollar is strengthening. We can see that it is today shooted above the 75 levels, and the USD INR also is reflecting that, as the used dollar currency index also is reflecting. So that's a breakout kind of happening. So rupee is weakening. So this is another concern. And above all of that, the crude oil is shooting to 87 crazy levels, all-time high levels, and this is a big blow to our economy. Gold, for some reason, is cooling off and then coming to the support zone. Right, so that's the thing, and US markets continue to be in red as of now. We'll have to check that tomorrow morning, but this is the worry. Across the US markets, big fall of 10 to 15% has happened last week, and that's exactly what is reflecting in our market. So keep a tab of that in the next day morning pre-market, and then if that continues to happen, then it is likely to reflect in our markets as well. First in STX, and then reflect in our market. So keep a tab of that in the next day morning. Two actionables is Maruti Suzuki, which is weekly chart is given here. It's kind of inverted head and shoulder breakout that has happened, and it is broken out, and then there's resistance far away at 9988, and this can be a clear swing trade that can be taken. Cholamandalam investment, finance and investment is another one. It seems to be break. You have to just keep a watch if it is giving a close above this resistance. If that is giving, then it's a potential good trade. The momentum is high. The volumes are huge. Buying is happening from somewhere, and the trend also is bullish. And trend, momentum, volume, and price pattern are bullish. Maruti also same. Volumes are high, momentum is good, trend is high, and the pattern is also good and bullish enough. So two actionables, Maruti and Cholamandalam. Just to wrap up, moderate bearish is the short-term view. So my view is not based on the news; it's purely based on what the charts say. The charts patterns, the support resistance levels, momentum crossover, trend crossover, all of this, along with the institutional selling that continues every day, big selling, and the volatile moves. So this is giving me indication that it's a short bearishness that can be expected, but things could change the next day. That we'll have to handle, after we see it on the charts. But as of now, I just have to tell what the chart says. Right? So sideways price action is what Bollinger Bands is saying. So keep that also in mind. The Fed event outcome has happened. It might have got adjusted today, but it was an expiry, so you never know whether it was an expiry play or if the Fed outcome impact reaction. You never know that. So, but it is assumed that the outcome has been digested by the market as it reflects in the price. So global cues are still bad. Dow Jones 9% down, S&P 10%, Nasdaq 14%. All of this is down. Then obviously our market also will reflect that bearishness. That's what is happening. So some greens, if you're seeing the next day, then we can hope there's some kind of consolidation or a slight up move. Right. The positive thing is that the momentum divergence is the Nifty, which can move up, which can cause the price to move up and climb into the sideways from the bearish zones. And the Bank Nifty is showing strength of closing above the 50 and 20 DMA. So that's a positive things if you have to look at that way. VIX is greater than, had shoot up at greater than 24, so you have to be cautious. It right now it is cooled off a little bit at 21 levels, but it's still at a very high, about 20, so be cautious. So there is negative news floating around on the multiple things, and Fed news is also there. So inflation, all of these things are floating around. So you could have sudden reversals and surprises that can happen at this kind of volatility level. So always go for hedge strategies or current spreads. Right? Stop loss are a must for intraday. If you're carrying forward, hedge it with vertical or current spreads. Right? And trending intraday price actions can work out well on options buying and selling both if you play it with proper stop losses. Right? So that's a view. My view is moderate bearish. Right? Based on the charts, what I said about it. So if that helps you to frame your view and then frame your trade plan for the next day, then consider hitting the like button, share it with friends. Thanks for watching and happy trading and happy learning. Bye.